Hi, this is Randy Finney with Right Side of the Chart. This is a mid-session update for Friday, August 14th, 2020. It's a little afternoon, it's 12:18 Eastern as I'm starting the video. Not a lot of new stuff to point out, so I'll do a very quick recap. We do have a sell signal on one of those building material stocks that I covered yesterday. I'll get to that as well. So just a quick recap. The S&P 500 is testing the previous highs. It's been several days now where it's at that level back from before the COVID drop, the big drop into the March lows. So that's where we're at so far. Yeah, at resistance. Those are major reaction. That was a major reaction high, so a lot of traders are undoubtedly watching that. Still have clear negative divergence in place. That tells me that if any breakout is likely to be relatively short-lived and relatively minor in scope. However, a sell signal, still waiting to see a break of the uptrend line, that blue uptrend line right there, to get a sell signal. So that's that. And today looks like markets are mostly flat. Well, yeah, we were going back and forth between red and green on the S&P. Right now it's up 0.07%. So nothing really new to report there. QQQ, same story, down slightly today. Still above trendline support. We have the blue trend line here. You can see it here on this daily chart. You can also see it on the 60-minute chart. Here it's white. I'll color that blue just so they match up. But that's it. Above those trends, same story. Series of divergent highs. Each and every one led to a correction so far. You get these divergent highs. Little typically 4 to about 7% pullbacks there. And there's our most recent one. It really hasn't played out for much of a correction yet, and it's been a pretty big divergent high. So this one has, well, they all had the potential, but this one has more potential, I think, to finally take out what has since become a very well-defined uptrend line. A lot of reactions. That's what I mean by well-defined, clean reactions, not a lot of whips or any whipsaws through it for that matter. Many reactions off that level. So that's it. That's what I'm watching. And I think I have an alert set. If I don't, I'll go ahead and set that now. I probably have it set on the daily time frame. So that's it. We get that. We should have a nice sell signal and take us back at least down here. I think I'm looking for, about another 7% drop? Yeah, about same as last time. Again, minimum. So we'll see. There's certainly the potential that if this breaks down, it's going to maybe trigger some of the longer term, more powerful sell signals on the longer term charts. But as of now, status quo, and unless something big happens between now and the close today, really don't expect much to us to have any more clues as to where we're going this week. Let's look at gold and silver. Gold continues to stall out at long-term resistance here on this weekly chart I just jumped over to. Same story. So there it is. That's the last bull market top back in 2011. We hit that, and this is a weekly chart, so in weekly candles, a little momentum fueled overshoot. So far, gold has fallen back below there, confirming my suspicions that when we took it out, it would prove to be a momentum fueled overshoot. Now, how far down do we go? Same thing. I've updated this quite a bit, and again, this is just a recap. If you haven't caught up on any of my recent videos, we already backfilled the gap. That was a minimum target. I'm talking about this gap right here. Hit that this week. And I think we continue on down to at least this trend line here in that 173.87-ish level, call it 174. So there's more downside, I think, coming in gold. And silver, similar story. Silver ran into a long-term resistance zone. Also had a little momentum-fueled overshoot, but got checked on that so far. Coming back in, down another 2.87% today. Futures are really where my focus has been. Here's the SI silver 60-minute chart, and that's it. So we went up to that 27,370 level, offering an objective short entry yesterday. So far so good. This was my expected bounce target zone here between the 26,417 and 27,340 after my target down here, that uptrend line, and that 24,573 level was hit with a slight momentum fueled or brief momentum fueled overshoot. So that's it. Same thing I was saying yesterday. I think this is where we go from here. We'll go on, probably take out that trend line. It's already been checked once, maybe get one more bump there and continue on down to here, and ultimately my longer term swing target in silver. So I see next week, looking for more downside there. And same thing in gold. Gold has stalled out, had a potential bounce zone up here to 1951.60ish, up to about 1997, and so far it's really struggling. It tried to get past that and got a little way there, not even maybe halfway there, but it's hugging that 1951ish level again, and indicators are turning down. So that's still a possibility, but at this point in time, I favor that the bounce is probably over, especially the fact silver's already run into resistance. I think you're going to see the seller step in there. So this is what I'm looking for next week. And as I often say and have said recently, you get more bang for your buck typically trading the miners than gold, GDX that is, the gold mining stocks, or even better, select individual miners. So there's GDX, broke down from that beautiful bearish rising wedge pattern, hit my first target, 39.09, where it's bounced for the last few days. It's held that support level. Still may be some flagging type action, getting a little bit long in the tooth for a flag, and it's not textbook, but either way, the story is the same. We need to break 39.09, we'll call it $39, and that should open the door for the next leg down to at least, I think, this 34.60ish target. That's my near-term swing target I'm looking at. Possibly more, possibly down here to 31.33. Again, all depends on whether gold and silver that run is over and that they do have more downside. And yesterday I highlighted the building materials sector, as well as about 20 or so of my favorite picks within there. Trade setups, none of which had yet triggered an objective short entry, all of which are still in an uptrend. However, I did get a sell signal today on this one, JHX. However, it's one sell signal out of 20 or so stocks I was watching the sector. The sector itself is still above trend, so you have to take it with a little bit of a grain of salt. Now you can certainly look, it may play out that the charts are bearish, and the case can be made, and I think it will hit this target. It's more a matter of do the rest break down soon or not. This is the first one. If we had 3 or 4 breaking down today, or the sector ETF or the sector itself, yeah, I'd have a higher degree of confidence, and that, because these guys tend to move together. But I still maintain these targets. You can see here, covered yesterday. Nice clean breakdown, gap down below the trend line, just like it was back here. Gap down there, and maybe this will happen like it did last time. We gap down, went sideways for a few days. Maybe it was waiting for the rest of the sector to buckle. There was also some support there. So that's it. Like I said, we'll call it a soft sell signal. It's a sell signal. Take it for what it's worth. However, again, would be much better to see some of the other ones follow suit. So maybe next week we'll see that. Let's take a look at some of those. MAS sitting right on the trend line, ready to go. MLM, again, these were all covered yesterday. Close, not there yet. Here's another one, Trex, right there. Just one bad day away from triggering a sell signal on a lot of these. OC, SSD. That one's actually cracked this minor trend line here. It has the other trend line up right there. Not very impulsive, but it's below it. WMS, a little room to go. LPX, ready to go. Again, when I say one bad day, I'm talking about one big red candle or gap down or something like that. So there it is. So you have some of these. This one started to crack. This one had a soft sell signal. It was a breakdown, and it's below it again today. So there's the XP. But again, the more you see breakdown, the better it is. There's IBP. And again, so actually there's a couple crack. Well, see when I roll here, you see this? If I have to force it, here's that trend line I have. And if I'm rolling, which I am, my scroll wheel, you're right on the line. That's not a clear or solid breakdown. That's, questionable. So with the market in a, very resilient uptrend and this sector, you want to give it the benefit of the doubt. It's not an all-in moment yet. For these, maybe start to scale in, especially those that are breaking down, like I just highlighted. DOOR, ready to go. So that's it. Let's just move on to next one. The other things I'm watching are commodities. I still like the ag commodities and natural gas too. I'm laid out a long-term case a case for a potential major bottom in that. I'll get to that in a second. Let me just run through my flagged items in my commodity. I'll just use the ETNs right here. BAL, cotton, still, moving up. Most of these ag commodities are in an uptrend. Not all, but most. Sugar, clearly in an uptrend, moving up higher. Already hit that 40-47 target, continues to move higher. Cane, I'm watching these divergences. Just give me a little pause. Cane's also coming up on that 626 resistance level, potential target there. Forget these. A lot of these are old lines. I prefer sugar futures myself, and I also like SGG for the ETN. But I've been covering both of these lately. What else do I have here for you? Cow. Looking okay. Again, the ag, a lot of the grains have been moving up, and that's usually not a good thing for the livestock ETN right here. Natural gas still looking good. It already hit my 1310 target. This is a daily chart. I recently gave you targets on the 60-minute right here after this this breakout right here. And it continues to move up. But again, this one's more about the longer term chart. Here, I'll flip over to that. But I do want to mention that it's taken out that 1310 resistance level after hitting it. So, the technicals are playing out well. This is where the last objective long, we had a breakout here, then a back test. That was an objective long. Hit that 1090 target, hit the 1177 target, hit the 1310 target, pulled back to the 1177 target. Resistance once broken becomes support, powered up, and since that level is already hit once, that's usually what I look for, a pullback on the initial tag of my targets, and then it's already taken it out, which opens the door for a move up to that 1507 level, and should that be hit, then we're talking another 12% in natural gas after that, 1775. And again, this one was about the long-term chart. I covered this in a recent video. Put up these cycle lines here. If you can see the blue lines, they're a year apart. You can see down here if you use stock charts, put up cycle lines, and the frequency is 52 weeks. It's a weekly chart, so 52 periods is weekly. And what I was pointing out is on those, whatever it is, we're in, it's hot right now. It's not a huge demand for natural gas. Usually you think winter, but maybe they start. I don't know, whatever it is. I'm not that's not my forte, natural gas. There's some people out there that might trade it more often, know all the ins and outs of it. All I know is I recognize a pattern here that every year, about this time, with very few exceptions, you bottom and you get these nice rallies. Sometimes the rallies are quite a bit more, but they're usually double digits. Again, I went over that in a recent video. That was last year. There was your rally, and at that point in time, we didn't have any the bullish technicals. We didn't have any divergence. We didn't have positive divergence. Now we do. So this seasonality factor coupled with the positive divergence like we had right here at that low, well, that wasn't the seasonal thing didn't come into play. It was a divergent low. This was a divergent low right here. The rally started, then you had that seasonal play come in, and that rally kept going. Divergent low, divergent low. So again, the case can be made for a much higher move in natural gas. That's what I've laid out, and so far so good. It is up. UNG. Let's go back to the chart. UNG is up another 7.28% today since the back test alone. Moving about 40%. So stock market is doing its thing, but there's a lot of these commodities that are doing their thing even better right now, and that's kind of where my focus. And again, it's the charts, it's the risk reward factor. I'm just not seeing that the stock market. Well, I've spent enough time talking about it, so let's just move back on to these guys here. All right, the other ones I'm watching, soybeans again. Held support, last objective entry. I pointed out the pullback to this trend line as an objective entry, so there it was right there, and good for nothing big, but about a 3% lift. Now what we're watching is this 1447 was a resistance level / target. I'm going to brighten it up a little so you can see it. We already hit that once right here, so I expect to come on through it, and my next target is the downtrend line, the primary downtrend line. Let me zoom out a little bit so you can see it. There's your downtrend line, and there's some nice price resistance in there as well. So that's a zone, a target zone, about 1474 to 1485, and that would represent a move of about another 3% or so. Not obviously not exciting, doesn't move like natural gas, but then again, it doesn't drop as much as well. So you can take a little bit bigger position size in soybeans to make it worth your while. Plus, I'm looking as a long-term play, bottoming play, potentially break this trend line and move all the way up here at minimum in the coming months, and that would be a run of about another 17-18%. JJG grain ETF breakout of the downtrend line, bullish falling wedge right here. Here's your downtrend line right there, just like you had right there, just like you had right there. And there's your divergence lines. These form a wedge. It was a downtrend line right there. And simple stuff. Wash, rinse, repeat. Wash, rinse, repeat. Wash, rinse, repeat. This one was a breakout. Hit that 4160 target almost to the button. And sometimes you break out, never look back. Sometimes you come in and you back test. And that's what this was. So that was an objective long entry. 4146 was already hit. So I expect little, if any, reaction there. Followed by a move up to my next target at 4350. That would be about almost 10%, and then ultimately, continue on. And again, there's a potential for a longer term bottom. These are, even if we remain in a bear market in the grains, we can swing trade these, counter trend rallies, which are usually good for, double digit gains, 10, 20% or so. All right, next up, wheat. Obviously, this is a component of JJG, which I just covered. We already hit our second price target, hit our first target here. Went on to hit the second price target. T1 hit, T2 hit, had a reaction there, pull back, bounced off. T1 was resistance, acted as support for a while. We took it out, moved back down, but it looks like the next leg up is most likely upon us, and then so we're looking at these next targets up here. We'll leave the stop in place on that one as is, which is a daily close below 490. If we clear T2 and head up and hit T3, I'll probably raise that stop, that suggested stop for you there. Corn started moving yesterday, big divergent low. I've been expecting corn to play a game of catch up to some of the other grains, and nothing big so far, but again, I think there's some nice potential on this one. Very, very nice constructive looking chart, and again, it's all about risk reward. I think the downside risk on corn is pales in comparison to the downside risk in the stock market, especially tech stocks, things like that have gotten ahead of themselves. So could be dead money for a while, or it could continue to move up from here. But I can tell you this: if it can take out the downtrend line and that 1244 resistance level, that should open the door for a move up to that target up there around 1422. JO coffee, doing its thing. Nice run since the breakout here. It looks like we entered this trade back here at 3101, somewhere around here. Ran up. We hit our second target, and I didn't get a chance to make that an official third target, but I told you I still think that target will be hit, and then some. So we already hit T2. It was about a 16% gain or so. Made it to about halfway, 2/3 of the way to that potential third target. Had a correction when we took out this trend line right here. This is what I had pointed out at the time. We had an uptrend line, boom. There was a sell signal good enough to trigger a stop if you had raised stops, or even a short pullback trade. And we're back above that former T2 level now. So again, the chart looks constructive. This looks like the first corrective wave on this run. You had this big run up, following that little wedge breakout. The bigger wedge breakout, set up that smaller wedge, boom, run up. Looks like a corrective wave. Just like this one right here. You had a run up, corrective wave, then your next leg up. You had a run up after the breakout, corrective wave, and then your next leg up. This one was kind of a sloppy or big corrective wave, but it ultimately had a 3-wave up there. So that's what I'm looking at right here on JO. And cocoa, NIB offered just a beautiful long entry back here, objective long entry with the divergent low and the pullback to the trend line. I'm talking about this longer term multi-year trend line, and not much to add to it. It's moved up already about 24% since that objective long entry. It's consolidating, taking a little breather, but still, longer term still looks constructive. Near term, it took out this trend line, and again, after a 24% run, sometimes these things need to take a breather. They get overbought. You can see down here, but overbought usually is a speed bump on the way to the next move up. You can see right here we were overbought, and same thing. We had a corrective wave about halfway up, A, B, and then finally C. We became overbought again, but the second time we made a lower low. We had negative divergence, and that was the end of the run. So thinking something along those lines here. We could go a little lower or not. Either way, I think this one's good for all the way up here to about 35, 38 at least in the coming weeks. And last but not least, what I call the one-size-fits-all. If you like the ag commodities, whether it's a pure play for you or just diversification in your portfolio, which is always a good idea, whether you're a long-term investor or even an active trader, don't put all your eggs in one basket, and that's where DBA comes in. And so instead of going into each and every one or trying to micromanage or manage altogether those individual trades I just showed you, the individual commodities, you get them all here: live cattle, soybeans, sugar, corn, cocoa, wheat, coffee, hogs, cattle, cotton. And the story of that one is we had a bullish falling wedge here, broke out, but then we went in this basing pattern here, consolidation period, broke out, back tested it, and the uptrend line. So there was your last objective long entry, and I pointed that out at the time last week it was, or earlier this week. Breakout back test of the top of the range as well as the uptrend line, objective long entry. It's been moving up since, so expect this one to continue on, hit these targets over time. Reactions at each level are likely. And that's it. Let's see if there's anything else I want to cover. Nah, really not much. Let's just let's leave it at that. Just watching gold, and can have the little short-term trend line here and that 1951 level that gold's starting to crack since I started the video. So that, we'll see what happens today. But again, I don't expect fireworks until next week, or well, whether we get fireworks or not. But we'll pick this up where we left off next week. That's what gold looks like. And again, this is what silver looks like, and I can do the same thing. Zoom in there and give you a little, minor trend line that has been taken out. And there we are, sitting right on that 26,417 level. And so I think if and when that goes, which I suspect it will, because we already hit the, my uppermost bounce target, and that should open the door for a move down to the next target, or targets, plural. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great weekend.